Hello, hello. I am Debbie Pontikas, realtor at Retsy and founder of the Pontikas team. And I have been getting a lot of questions lately from my clients about what's going on in the real estate market. And I thought, what better way to answer those questions than to bring on a professional that knows more than me. And so today I have with me Brian Yamplosky, who is the founder and owner of Orion Mortgage. So Brian, say hello.
Hello, Brian.
And Brian, why don't you tell everybody a little bit about yourself?
Okay, so thanks, Debbie. A little bit about myself. I have been in the mortgage business for over 30 years, which means I'm way older than you are. I've been one of the owners of Orion Mortgage for, I think it's been 22 or 23 years. So we've helped a lot of people, seen a lot of markets. Yeah, that's kind of my backstory.
Great. And Brian and I have worked together for almost 8 years now. So I know he knows his stuff, which is why I wanted him to kind of help me answer these questions. So let's just jump right into it. So interest rates, I think that's the biggest topic that's out there for anyone who is considering making a purchase of a home. It's also impacting those who are thinking of selling their home. So let's talk about that. Where are we today, Brian?
All right. So interest rates. It's probably the most the topic with the most angst from potential buyers. They're worried about interest rates. Rates right now have been fluctuating between, I'd say, between 6.5% and 7% for the last month or so. Compare that to 6 months ago. 6 months ago, rates were at about 5.8. Okay, so they've gone up about a full percentage point in the last 6 months. Where they'll go, I cannot emphasize this enough. No one on this earth knows where rates are going to go. The Fed doesn't know. Chairman Powell doesn't know. Facebook posts don't know. The reason why no one knows is because interest rates do not follow what the Fed does. Interest rates do not follow what anything does other than the combination of many variables. The stock market, the bond market, world events, political events, the anticipation of, and then finally the reaction to all of those economic reports that come out. So this is a long answer to your short question of, what's going on with rates? That's where they're at. And I think it's exactly where they should be, around 6.5 to 7.
Yeah. So do you feel like, I think the struggle that I'm having with clients is that, they saw the 2%, right? Mm-hmm. Everyone saw this crash down to, I call it a crash of interest rates down to the low 2s. And people are hoping or praying that we might see that again. What are your thoughts on that?
So if you look at the history of our economy over the last 40 years or however long you want to look, there was never a time when rates were in the 2s or 3s, except for this temporary period when they were a few years ago. It was not a sustainable time. I mean, wasn't there something else going on during that time when rates were real low?
I think so. I think we're all kind of, locked in our houses for a while.
That's right. And there was some COVID pandemic that shut the world down. So yeah. I suppose it's possible if there's another worldwide pandemic again, then sure, rates could drop, but it's unlikely for that to happen again in our foreseeable future. And so I don't expect interest rates to drop. They could drop a little, but they're not going to get back to where they were. That was just a moment in time.
So what would you say to a buyer that you're consulting and they're saying, what can I just wait? What do you think? When do you think we're going to at least get a 5 in front of that rate? What would you say to someone who is waiting for that to happen?
I would say that's not the right question. I wouldn't say this, but in my mind, I'd be thinking that's not the right question to ask.
Okay.
Because if someone's asking, when do you think the rates are going to get down to fill in the blank, 5 or whatever, that implies that they're waiting, they're trying to time the market. And that's impossible. You cannot time the market. It's kind of like if you were thinking of buying stock in a company. If you were thinking of buying stock in, Mercedes-Benz, the pricing is going to go up and down day by day And there's really no way that you're going to forecast, is today a good day to buy the stock, or should I wait a week, or should I wait 6 months? There's no way to answer that. You just can't control what affects pricing. So if someone was thinking about maybe waiting until rates dropped a little, I think that that's the wrong approach. I think the time to buy a house is when you're ready to buy a house, not when you think interest rates are cooperating, because the most important thing for people to understand is if you bought a house today and rates went from, let's say, 6.5 to 7.5, you're going to be really happy that you bought your house, because if rates are now up to 7.5, you'll think, well, thank goodness I already bought, I'm in at a good rate.
Right.
But if you wait and rates go up and you buy later, you may have missed out on that. That's the opportunity cost of missing out on the opportunity. Now, on the flip side, I keep talking, Debbie, I'm so sorry.
No,
But
please do.
on the flip side, if you buy at, an interest rate of 6.5% and then rates drop, because that's the fear, you can always refinance. If rates drop from 6.5 to 5.5, it might make sense for you to refinance, and you'll already have owned your home, so you won't have missed out on that opportunity. But, it's timing the market is an impossible thing. Don't try to do it.
Right. And I think what I've been telling clients is, today is the worst case scenario if you lock today. So what do I mean by that? Where if you can afford the mortgage at today's rate, then it can only get better if you lock it today. Because if it does dip, if you're waiting for that miracle of it dipping down to 5% or lower or whatever it is, then you can refinance, like you said, and now your life's even better. But it could also go up.
Yeah.
So if you're wanting to purchase today, then you're kind of hedging your risk, if you will, by not trying to time the market, like you said. And if you can afford it today at today's rates, whether they're 6.5 or 7.5, then there's no sense in waiting. Just lock it, move forward, especially if you find that house that you like, because it can only get better. It's not going to get worse.
I think I agree with everything you just said there.
Great. I'm glad.
Good job.
Thank you. Okay, so you mentioned the word timing. So let's talk about, is it the right time to buy, or can you even answer that question?
I'll say it this way. If somebody needs to buy a house because they're moving to a new area, or they've had 6 new babies, or there's some other compelling reason in their life that's saying they need to buy a house, then that's the right time to buy the house. I wouldn't look at the market. I wouldn't look at interest rates. I wouldn't look at all those other things that really don't have an impact on making the decision of buying the house. Because when you buy a house, I'm assuming that you're buying for a relatively long period of time. It's not going to be for the next 3 months or 6 months or 12 months. Most people, when they buy a house, they don't ever want to do that again for many, many years. So if you're going to be in the house for 5 years, 10 years, whatever, it doesn't matter if rates are doing this or if pricing is doing this, because over the long run, it will even out. And generally, pricing goes up on real estate over the long run.
Yeah. Do you see any difference, or do you have any different discussions with those reaching out to you about wanting to purchase an investment property?
There was a lull in people interested in buying investment property for a period of time. Generally, when the interest rates started to go up from, when they went up to the 5.5 range, everyone just froze.
Right.
And now that they've kind of gotten up to 6.5, people are buying again because they realize, over the course of time, rates in the 6s or even 7s are not high relative to where they've been over the course of the last 40 years. So there has been a resurgence of interest in investment properties. I think the challenge is, and you can probably speak to this better than I can, the amount of homes, the amount of inventory, trying to find the right buying opportunity is
Right.
the challenge. But when you find the right investment property, I think you really need to have your mind made up and make a decision to buy it, because if you don't, it's going to be gone fairly soon.
Yeah, no, I have several clients that are looking to pick up investment properties. And I think the type of investment property is changing. In the past couple of years, everyone was rushing to do short-term rentals. But now people are looking at real estate just more of a hedge against inflation, and wanting to put their assets into a different, put it into real estate. So we're looking at more long-term investment plays, which are great. And I always encourage that. But what I'm finding is trying to find the spreads right now. Everyone's wanting 8% returns or higher, and it's just difficult to do because rental rates are so high.
Yeah.
And that's where we're squeezing the delta a little bit on getting really significant or great returns on a long-term investment property. That being said, I think it's still a really great asset to invest in, and a great place to put your money, for the long term. So
I want to add something because this morning I was talking with a client who's thinking about buying a new home, and then the question is, should I sell my old home first and put all the money into the new home, or should I keep my old home, rent it out, and put less down on the new home? So in other words, should I try and own 2 homes and be a landlord on the old one, or should I just sell it and move on? And so I ran the numbers with him, and I compared the payments on those 2 scenarios. I calculated, okay, let's assume a 5 or 6% appreciation rate on the old property. Let's figure out what the rents would be. And I ran all the numbers, and on a 36-month time frame, looking at it for a 3-year period, if he kept his old property as a rental and bought the new home with just minimum down payment, he would have a net gain of about $86,000, compared to if he sold the old home and dumped all that money into the new one. After 3 years, he'd have a net gain of about $3,000.
Oh, wow.
So clearly, I'm going to be sharing these numbers with him and say, I think it's in your best financial, best interest financially to try and hold on to both properties. It's a huge difference.
Yeah, that's pretty significant.
Because you've got appreciation working on both properties at the same time.
Right. Yeah, I think that's great. That's a really great analysis. Brian, so if anyone would like to ask you more questions about where interest rates are today, or maybe even that topic you just brought up, what's the best way for someone to find you?
You can find me anywhere. You can find me by calling me at 602-912-0222, or just go online, Brian Yamplosky at Orion Mortgage. Orion is spelled O-R-I-O-N. But we're a local broker in the Phoenix area. So if anyone does have questions about any of this stuff, I'm really happy to answer questions.
And I can vouch for Brian as well. As I mentioned, I've worked with Brian for over 8 years. He is truly one of the best, and I definitely trust my clients with him. And Brian, thank you. I think this was a really good overview, and I'm getting these questions all the time. And I thought, again, who better to answer them than someone who knows their stuff like you. So thank you.
Thank you, Debbie. I feel the same way about you.
Thank you. All right. Take care.